All right. Good morning, everyone. Let's get going. All right. U.S. markets made a nice little recovery after quite a sharp spike down earlier in the session. We really just totally did a U-turn to more or less where we were on pre-opening levels and had another sideways drift day, which is quite wonderful. Same sort of thing that we continue to see. We've continued to see for several sessions. We did have the ZEW survey out of Germany that was better than expected earlier, continuing to kind of give a boost to expectations out of Europe, and I think expectations for global growth, strictly because of the turnaround and the possibility that Europe is coming out of a recession. In Asia, we had a relatively mixed session, another same sort of thing, light day of trading. Hong Kong was actually closed on the day, so we didn't get any leadership out of that. I think Australia was down a bit. Japan started out the morning session up reasonably, close to 1%, dropped down about 0.5%, and then let's see, now we're up 1.3% to kind of close the day. So really just some sideways whippy action there, probably more or less just chasing around the yen as it moves around. And that's pretty much it. We had automobile shares that helped the Shanghai market. But other than that, I mean, we just had a really, really light day, very little volume. And I think it's what's really been building is, and there's been a lot of things that have really kind of divulged lately in terms of correlations and things like that. I was reading an article yesterday about Tobias Lefkovich, the head strategist at Citigroup, and he mentioned how correlations across inter-market correlations between shares and between the bond market and the equity market and between the currency markets and equity markets. The correlation models that he runs that typically run at close to 66% correlation has fallen to below 20%. And just saying how that's a big worrying sign, just because it's really abnormal to see that happen. We've also had a couple other things. One thing that was in the headlines yesterday as well, the Hindenburg omen, which spotted again basically 5 out of the last 7 days, I think, on the S&P, and basically what we're looking at for that is the biggest contributing factor to that is stocks, and if you see here on the bottom, these are stocks hitting new highs, and these are stocks hitting new lows, 52-week highs and 52-week lows. So over the past 2 weeks, we've had about 110 stocks hitting new 52-week lows, and 97 stocks hitting new 52-week highs, which is really, really rare in markets. That sort of thing happens over that sort of period of time. So there's a lot of people that are starting to get worried that this action and the failed ability to really break to new highs over the past few sessions is going to weigh on the markets in the near term. So just points out the lack of correlations between the market at the moment, and the fact that there's just very random activity going on in the equity market at the moment. All right, we had Harmony that had fourth quarter earnings out this morning. Really came in, I think, as a shocking miss. Headline earnings per share lost quarter on quarter of R1.86. Expectation on Bloomberg consensus expectation was for a 10-cent profit. That takes us down from year-on-year earnings. I'm not sure if there's once-offs in there, but that's the headline number. I mean, the year-on-year number was expected at 2.19, came in at 47 cents, a bit of a shocker. And we have no divvy that's going to be paid, but they weren't expecting a divvy, so that's obviously not a miss. MTN, the big one this morning. If you look at straight earnings per share, it was quite a nice beat. I think headline earnings per share came in pretty much in line with their recent guidance from the trading statement, which was higher than what the expectations were from Bloomberg consensus. Divvy per share was a light beat. of 6 cents. We also had revenue that was a small miss. But I think what was interesting is just that the ARPU numbers were quite weak. I think I'm not 100% sure what was expected there, but down 13.3%. I don't think is what the market was expecting. Subscriber base grew nicely, and they had a lot of positive commentary out of their overseas operations, specifically Iran and Nigeria. So I think all in all, maybe a bit of a moderate miss out of MTN. When you look at the ARPU numbers and things like that, more in line to a moderate miss. All right. 10-cent quarter two numbers are supposed to come out sometime today. Typically, these come out, if I'm not mistaken, the nighttime in Hong Kong, which is kind of around lunchtime for us, maybe between noon and 2 o'clock. So just keep an eye out for that. That's obviously going to really move Naspers a lot. You can see what the expectations there are. We're expecting 2.25 billion renminbi, or whatever you call that, and on earnings per share, we're expecting 14.51 billion in revenue. So keep an eye out for that today, guys. It could be an opportunity to really make some quick money in the short term. We also have Anglo American, which is going ex-div today in London. So those the local and offshore price will match up when currency converted. All right, we had French and German quarter two GDP. This kind of continues along the theme of outperformance and the European data lately, which is really, I think, a welcome relief there. I'm not sure how much of this is all priced in, but important nonetheless. We also have French CPI that comes out in just a little bit. We've got the release of the minutes for the Bank of England monetary policy meeting at 10:30. We've got quarter two European GDP, which I really think is something that we need to pay attention to today at 11 o'clock. Like I said, I think expectations are starting to rise a little bit. But I don't think that they're too great. So, we come up with a nice beat. I think it can give the market a good boost. If we come in line or miss, I think it'll weigh on the markets a touch. And we've got mortgage apps in the States. We've got SA retail sales. And then we've got PPI numbers in the States at 2:30. All right, let's jump into the maps. All right. First thing we're going to have a look at here is CFR. I want to look at this on a 30-minute chart and just show how we kind of to say that we're overextended, I think is is an understatement. You can see there we've basically run from 91 to 102 in, let's see, the last, call it 10 trading sessions. Okay, so we've moved 10% in 10 trading sessions on CFR. I think it's made a nice move. You can really see here about 100 rand 90 cents. There's a bit of a level here where we broke out. We kind of gapped above previous highs. We've held it for a session. If we drop 190 today, I really think that could be kind of the start of a bit of a pullback, and also potentially being able to drop below this uptrend, which is slightly lower. So I think dropping those levels today or the next day could be important. Let's keep an eye on CFR. That could be an opportunity to make some money in the short term on a bit of a reversal there. Not to say that you should be shorting it on any sort of long-term basis. All right, Sasol. Beautiful flag pattern here. I mean, this declining trend line here is absolutely perfect. You can really see there. And this is coming on the back of an up move, so it makes it even better. We really finally put in a decent day of trading yesterday, with a relative underperformance to the mining sector over the past 4 or 5 sessions. Yesterday we finally broke out, and I think this may be our catalyst to kind of get us up closer to the 500 Rand level. So watch it today. I really think that now's the time to pounce if you're looking to get in on Sasol and you've been waiting for this to start to move. That's the wrong ticker. Vodacom. Okay, let's look at Vodacom. What I wanted to show here, same thing on the 30-day chart. You can see here on this dot, unfortunately, it does that when you close. You can see where the dot is. That's where we closed yesterday because they closed us up in the auction quite a bit. But we we've really been putting in quite a firm line in the sand in terms of resistance here for, going back maybe 7 or 8 trading sessions up here around 21.5, and you can see we just struggled to break through that for several days, and really this move is kind of coming off of a base, call it from 118. So I think we could have another $3.50. The upside could take us to 125 rather quickly. That we've actually broken out of this now in Vodacom. All right, Remgro. Let's look at Remgro. Look at the 1-year chart of this. I mean, this thing has probably been one of the biggest underperformers in the market in the last few sessions. Just hasn't been able to make that move to the upside. And you can see yesterday, as of yesterday's close, we've really dropped support on Remgro after yesterday's close. So I think this could be could be an opportunity to sell this thing. I don't know why it's been underperforming so much. So many of its holdings have been trading really, really well. But this thing has outperformed the market forever, and this could be an opportunity to actually to get short of Remgro here below that support level. All right, Imperial. I was going to show Imperial. The Rudder was talking with me about this one yesterday, and you can really see here. Let's actually even drop that down to there. We've really been in a sideways little channel here for several sessions, and bottom line is we've kind of dropped out of the bottom end of this channel. This has been 4 closes in a row. We've tried to get above it the last 2 days, hasn't been able to hold above it, and we closed just above that psychological level of 200. I think if we drop there, I wouldn't be surprised to see 7 or 8 rand to downside. Kind of the height of this channel to the downside, possibly take us down to close to 190 rand, maybe slightly above. All right. Tiger Brands, let's back out here a little bit. Tiger Brands, this is one of the when we talked about this breakout for several days, and we just kind of couldn't really continue to really push higher. We've dropped below that trend line now, and I think that we can definitely potentially trade lower, and maybe potentially even trade back down to what is kind of the support on the bottom end of the longer term trend, which would be down here around 285 in Tiger Brands. It's really disappointed in the last few sessions. I think anything except miners has been a bit disappointing in the last few sessions. And the last one that I'm going to show here is Truworths. I'll show Truworths there. You can see there it's really just pushing up against trendline resistance again as of yesterday's close. This thing's done this several times. You can see how many touches we've had on this trend line, and I think that's one of the reasons why it makes it so significant. So I think if we can move above 84 today, it really could be an opportunity to actually finally catch a bit of a breakout on Truworths, even though these retailers have been quite heavy as of late. And that's it for today, guys. Thanks a lot.